Yeah, staying on real estate, shares of a home builder, Toll Brothers, in focus after reporting third quarter earnings. The company saw a decrease in both homes delivered and contracted homes the company also lowered its delivery expectations for the remainder of the year. Lots of things to talk about in this report. Perhaps shouldn't really come as a surprise given the weakening we have seen in new home sales and existing home sales. But one number that really jumped out to me here, contracted homes down 60% in the most recent quarter. That is a huge decline here and a red flag and something that is getting called out in a lot of analyst notes on the street here this morning.
Right, yeah, and really goes to show, especially as we're tracking what confidence among home builders actually looks like at this point in time. I mean, that's continued to fall for consecutive months. I believe 8th consecutive month in August, lowest level in more than 2 years there. And so particularly here, as you're looking across some of these results from the luxury home builder in Toll Brothers, it comes down to what their actual sales gross margins are staying at right now. That actually ticked just a little bit higher. That was at 26%. You compare that to last year this time, 22.7%, but that also goes to show how much of the costs in the increased supply costs that they're seeing that they may be passing through to consumers as well that are buying the homes.
Something else that stands out to me about Toll is, we've been talking within retail about the higher end consumer. This is the higher end consumer, to be clear. These homes on average are $1 million when we're talking about Toll Brothers. So these are step up home buyers. These are not first time home buyers. And so if they are feeling pain, what does that tell us? We've heard from the retailers that mostly, Nordstrom's saying a little bit of a deceleration, but mostly the higher end consumer is holding up well when it comes to buying that kind of stuff. Maybe they're making different decisions when it comes to a much larger ticket item like a home, for example. By the way, I'm seeing some headlines from the Toll conference call that is kind of interesting here. They're saying they're modestly increasing buyer incentives in order to try to help with those numbers. And they say the best markets are New York, New Jersey, Philadelphia, and Dallas. The worst markets, Phoenix, Austin, Boise, and Reno.
Look at Dallas having a good week. Also in that Forbes list of most valuable football teams. What, the Cowboys, $8 billion? All right, Dallas. Shout out Dallas.
Forget the Cowgirls for a hot second here.
Cowgirls.
But $920,000, that average home price that you were mentioning. And they're actually saying within the full year deliveries guidance that they have their challenges that they're looking at right now and trying to navigate through. They've lowered that deliveries guidance, now expecting to deliver between 10,000 and 10,300 homes in the fiscal year of 2022 at that average home price as well. And they've got a larger $11.2 billion backlog right now.